Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, August the 17th. The year's 2022. Let's talk trading. Passing the prop firm test part 2. As always, these videos are for educational purposes only, and your results may differ from mine. Oh, I had some responses from traders. Had some good questions out there, and the trader that prompted this question was from Reddit. So shout out to the traders over on Reddit. So let me go take a look at these questions here. I can bring them up to you, and then I see if I can answer them. Somebody says, what indicator are you using that shows the high daily highs and lows? I'm not really sure which indicator you're talking about. This is the GPS, or actually it's the magnified market price that I modified that puts out this extra information. So that tells me how far price is off the high and off the low, the current high and current low. Now, you might have been looking at the TROHL5, where it'll put in the daily high and then the daily high from 1 day ago, and however many bars you want to look back, it'll draw those lines. So here's today's open, previous day's open, today's low, previous day's low. So I hopefully that will answer your question, unless there was something on a different chart. So TROHL5, it'll show the high, the low, and you just play with the inputs, and then you come further down, and so you want to put the daily in, and I'm using 2 bars with no shift, so that would be today and the previous day. So hopefully that answers that question. Now, let's see, we got another question asking me if we're doing the Walmart method, should you be a rat? And that's an interesting question. Walmart isn't a rat. Sometimes I am, sometimes I'm not. And what that depends on is basically right now we're in the green rat zone. So it's really tough for me to sell when I'm in the green rat zone. It's really tough for me to do that. Well, but Walmart will do it. So that depends on you. If it's, above or below, if it's above the green rat zone and below the red rat zone, in other words, you're somewhere in the middle, that's when I would have a tendency to trade in either direction. So for example here, it'd be tough for me to go short at 60. If I were to go short at 60, I'd just be looking to take a couple of pips. And that also has a lot to do with, let's see, do I have that on one of these screens? It also has a lot to do with how far we are away from that from the open from the current bar. So you can see here, H4 is still green, and H4 hasn't come anywhere near its normal range. So I would be tempted to short the H4 open, but not above it, or go long the H4 open if if price is coming up from above. So you can see here we're coming right to that H4 open. But once again, we're in the green rat zone. So if anything, I saw it come down. I saw it go back up. You can see the M30 candle hasn't reached its level either. So see, taking that short right now, you'd be up a pip, 1.5. And so it's kind of struggling. H1 only has 19 pips, and this is the start of this hour is the start of a new H4 candle on my broker. So now you'd be up, you have 2.8 pips. Now, the other thing that tells me which direction to look for is I also look for these H4 pivots to be filled. So as you can see here, we missed one from yesterday, and we've got news coming out soon too. So I would look for this pivot to get filled on the news. FOMC's coming out, I believe, at the top of this hour. We've got some news coming out. So that's my answer to that question there. You can see here, look, using the 1-minute chart, or you can look at the 5-minute chart. You can see, and so sometimes I'll also look and see how many bars in a row. You can see we're right back to that open. And H1, H4 just turned green. And we're right there. I think we're at the edge of the smart rat zone, maybe. Yeah, right there at the edge of the smart rat zone and the rat zone, because we I redid the calculations, and I believe we're using, no, this is still 20 pips. But it looks like the green rat zone that's interesting. Should be 60. If the low is 47, and the rat zone should be up at 67. I'm going to have to look at the code. Oh no, this is the smart rat right here. My mistake. This is the old rat. So the smart rat zone on the red, it's bigger. And the smart rat zone on the green is almost the same, 15. So to answer your question, it's one of those, it depends. And that's, up to the trader. If you're just trading the Walmart method and you're learning, you're starting out, before you get too fancy, just trade it as is. Don't worry about the rat zone. The only thing to keep in mind is the range, and you can on the hourly, and you can see here, past 7 hours, there were pips to be had. Sometimes just a little, sometimes a bunch. And of course, make sure you've got your stop in place in case price backs up on you. But you can see here, it hit 70 and stalled. So the high was 71, so you probably had to scratch that trade. And you can look here on the 1 minute. You can see the last time it didn't close above. We had one close above it, dipped down below, came back up, struggled. That should have been an indication right here. That congestion, that failure to push up higher. You just have to get out if you can. Just scratch it. So I hope that answers the question about rats and wall mall. And then we had one other comment. He says, wants to start with calculating everything in terms of percentages and let position size adjust accordingly based on your stop loss distance, X percentage risk per trade, stop loss distance time percentage risk per trade times current equity in the account. This way, if you know you're allowed to risk 5% a day and you lose 5 trades in a row, it's game over. So don't risk more than 3% on any given trading day. If you lose your first 3 trades in a row, stop trading that day. Yeah, maybe if that's what works for you. It's really difficult to talk about what somebody else should risk and when they should quit. That's really up to the person. Um, a lot of times what'll happen is if you quit, then you look at and you keep watching the charts just to watch, then you'll see your next 3, 5, 10 trades would have all been winners. And then you'll jump back in. And then, of course, now you start the losing streak again. So sometimes it's just better to slog it out. Now, if you're making errors or airball trading and you're just not sticking to your trading plan, by all means, stop trading. Take a walk, clear your head. You got to get back in the game. So you could see here prices pushed down. We're down to the previous day's open. Now we're in the previous day's wick zone. So you can see we're moving downward here. You can see what happened before at this level. It bounced. Price is moving back up out of the wick zone. So somebody might say, well, aren't you breaking a rule? You'd be trading against your candle color. That's right. Sometimes you break those rules because you trade what you see. In this case, you see price was pushing away from the 50. You're coming out of the wick zone, that lower wick zone. And that would have been good for a couple of pips. Just take your 2 quick pips and be done with it. And that's the important thing too. Once you pick a method for the day or a strategy or a tactic, you got to stick with it, because if you start to flip-flop on your what you're doing, you're not going to have statistics on your side anymore. So if all you're doing is 2 pip, 1 to 2 pip smash and grab, just keep at it. And if price happens to spike 5 pips in your favor, 3 pips in your favor, a lot of times it's just better to take that spike and be done with it. So, fellow traders, I hope I've answered your questions. If not, feel free to, ask again. And sometimes you really have to be specific. Maybe tell me, the timestamp of the chart you see, so I know what indicator you might be looking at, so I can answer your question specifically. And always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.